Greetings, my name is Kole Swanser. Welcome to the 2020 West Virginia Urban Agriculture Conference. And thanks for tuning into this segment. I'm going to give you a brief introduction to federal crop insurance and talk us about some of the options that are available to you as a West Virginia agricultural producer. My company, Agreus, focuses on agricultural risk management education, and we're partnered with the USDA's Risk Management Agency, or RMA, to deliver crop insurance and risk management education for West Virginia agricultural producers. So since not everyone is familiar with federal crop insurance, here's a quick summary. Crop insurance is a particularly important tool for managing agricultural risk. In contrast to most other types of insurance products that are developed and sold by private corporations, the federal crop insurance program is a public-private partnership. On the public side of this partnership, plans and programs of federal crop insurance are administered by the Federal Crop Insurance Corporation, the FCIC, through the USDA's Risk Management Agency, RMA, as part of what's sometimes called the Modern Farm Safety Net. RMA reviews, approves, and monitors the ongoing performance of all federal crop insurance programs to ensure program integrity and effectiveness for agricultural producers. Crop insurance premiums are also subsidized by the federal government. On the private side of the partnership, crop insurance coverage is distributed to farmers, ranchers, and other agricultural producers through independent crop insurance agents operating in the private sector. These agents are responsible for selling the policies, collecting premiums, and paying claims. The Risk Management Agency's mission is to promote, support, and regulate sound risk management solutions to preserve and strengthen the economic stability of America's agricultural producers. And they provide a wealth of tools and information on the RMA website. This is intended to be a primer on some of the crop insurance options available to you. It is important to understand that specific coverage details are contained in official program documentation and can change. In any case, the official actuarial and underwriting documents control. These can be found online at RMA's website, www.rma.usda.gov. As you've already heard, but it is important to remember, federal crop insurance is sold and serviced by local crop insurance agents. So if you're interested in crop insurance, you should first select and locate an agent who can discuss your specific policy options and coverage details. Let's take a second and think about what risk is. We can define it in a lot of different ways, but essentially risk can be summed up in two words: chance and bad. Risk is the chance that bad things happen, and we're all familiar with that concept in one way or another. Life and business and agriculture don't always go according to plan. We all get used to adapting and rolling with the punches, but we also learn to plan for and manage risk. So what exactly is risk management? As we all know, managing risk is a bit of a balancing act. We're constantly making trade-offs between risks on the one hand and rewards on the other. In fact, the prospect of a reward is the only reason we willingly take risk. And when we make risk management decisions, we want the rewards to outweigh the risks by as much as possible. The five main categories of agricultural risk are production, market, financial, human, and legal. All five are important. Federal crop insurance is primarily designed to help manage the first two. Agricultural producers purchase crop insurance to protect against two primary types of losses. The first is loss of agricultural production as a result of natural disasters. The second is losses of revenue due to declines in the price of agricultural commodities. Let's take a look at some of the many different federal crop insurance programs that are available to cover production and revenue losses for a wide range of crops. Several different varieties of multi-peril crop insurance, called MPCI, are available under the Common Crop Insurance Policy. These policies are available on a crop-by-crop basis. Where available, coverage options include protection for crop yields or crop revenue, which helps insure against commodity price movements as well. For example, you may purchase coverage to protect against yield losses on your corn, or you might purchase some type of revenue protection for your soybeans. Different types of livestock policies are available to protect against downward price movements for cattle, swine, and dairy producers. Rainfall index plans of insurance are based on weather data. Coverage is tied directly to loss of precipitation as measured by the index and is available for pasture, rangeland, and forage, and for apiculture. By the way, in case you're not an apiculturist, that means keeping bees. There's also a federal crop insurance program called Whole Farm Revenue Protection. We'll talk more about this in a minute. Across the country, federal crop insurance provided coverage for nearly $110 billion in crop value across more than 1 million policies on over 100 different commodities in 2019, and nearly $20 million of crop value was insured in West Virginia. As you can see here, several crop-specific policies are available in West Virginia, including for apples and peaches, barley, oats and wheat, corn and soybeans, and even some more specialized crops like potatoes and burley tobacco. However, the fact that crop-specific coverage is not available for a particular crop doesn't mean that there are no options available for insuring it. In a moment, we're going to talk about 2 programs that can be used to cover a much wider variety of agricultural crops not listed here. On the website, you'll find up-to-date program-specific fact sheets that describe a wide variety of available policies and programs. You'll also be able to find important updates, summaries of crop insurance, and information about specific programs for which you might qualify. For example, did you know that special program benefits are available for both new and beginning farmers and veteran farmers? Those who qualify can receive administrative fee exemptions, additional premium subsidy, and certain other benefits. As you've seen already, crop-specific insurance coverage is available for quite a few crops, but not all crops. There are many diversified farms that raise livestock and grow produce or other types of agricultural production for which no crop-specific plan of insurance is available in their county. How can these types of producers obtain coverage to protect their farm operations? In the next part of this segment, I'm going to talk about 2 programs that can be used to provide insurance coverage for most types of farm production. These are Whole Farm Revenue Protection, or WFRP, and the Non-Insured Crop Disaster Assistance Program, or NAP. Whole Farm Revenue Protection is a very flexible plan of federal crop insurance in terms of 1. The number of different crops that can be included in coverage, and 2. The combination of potential perils that it can be used to insure against. WFRP is also available in all counties and in all 50 states, and has seen program improvements added to it each year since it was introduced in 2015. Just like the name says, Whole Farm Revenue Protection Insurance is intended to provide a risk management safety net based on revenue produced from all commodities on the farm under one policy. The insurance plan is tailored for any farm with up to $8.5 million in insured revenue, and that can include animals and animal products, nursery products, specialty and organic products, up to 50% of the total revenue from commodities that are purchased for resale. Beginning with the 2020 crop year, WFRP can also be used to insure industrial hemp. WFRP does exclude revenue from timber and forest products, as well as for animals for sport, show, or pets. However, it does include replant coverage provision. A primary feature of WFRP is that all farm revenue is insured together under a single whole farm policy. It doesn't consider individual commodity losses, only losses from drops in overall farm revenue. Like other federal crop insurance programs, WFRP is subsidized. The amount of the premium subsidy depends on the number of commodities the farm has. More diversified farms that have more commodities receive a higher level of subsidy. The structure and features of WFRP make it well suited for farms that are highly diverse, those that produce specialty commodities, and or those that sell into direct markets, specialty markets, regional or local markets, and farm identity preserved markets. Good record keeping is also important for WFRP. To obtain coverage, you'll need 5 years of tax returns for the farm operation, which can be filed based on either a calendar or a fiscal year. You'll also need to prepare a plan of what you intend to produce on your farm during the insured year, and you'll need to provide some other supporting records and information as well. Since WFRP was introduced in 2015, RMA has made several changes to improve the program and help make it a more effective risk management tool for agricultural producers. Here are a few changes that took effect for the most recent crop year, beginning in 2020. Limits for expected revenue from livestock and nursery produced on the farm were increased from $1 million to $2 million. New smoothing provisions were implemented to prevent large year-to-year drops in approved revenue. And, as previously mentioned, coverage for industrial hemp was added to WFRP in 2020. As of 2020, payments that producers receive as part of state or federal disaster programs are also no longer counted toward their annual farm revenue to count. And finally, producers who elect to carry coverage under both WFRP and the NAP program can receive indemnity payments from both policies. NAP indemnities are excluded from WFRP annual revenues. So now that you've learned that producers are able to carry NAP coverage with or without WFRP coverage, you might be wondering, what is NAP? The Non-Insured Crop Disaster Assistance Program is designed for producers of crops that are not insurable under crop-specific federal crop insurance programs. Note that if a crop is only eligible for coverage under WFRP, that does not exclude it from NAP coverage. NAP provides financial assistance to protect against low yields or crop losses, and also for prevented planting, resulting from natural disasters. An important difference between NAP and federal crop insurance is that NAP is administered by the USDA's Farm Service Agency. So for details and to sign up for NAP, you will need to consult your county FSA agent. NAP is not sold by private crop insurance agents. To be eligible for NAP coverage, you must own a share in the crop and also share in the risk of producing it. In addition, your average adjusted gross income, or AGI, must not exceed the $900,000 limit for payment eligibility. Many different commercially produced agricultural commodities are eligible for NAP coverage if a crop insurance policy is not available for that crop in the county. As you can see, the list of crops that can potentially be insured with NAP is extensive and includes food and produce, livestock, forage, fiber, and specialty crops. In addition, various industrial and biofuel crops are eligible for NAP, and aquaculture, nursery and greenhouse crops, seed crops. Also, once again included for the 2020 crop year is coverage for industrial hemp, which is subject to certain specific eligibility restrictions. Producers should contact their local county FSA office to determine whether specific crops are eligible for NAP insurance and to learn more about the program. In contrast to WFRP, which requires all eligible crops grown on the farm to be insured under the policy, NAP coverage is purchased on a crop-by-crop basis. Basic NAP coverage is equivalent to catastrophic crop insurance coverage levels, meaning that the guarantee is established at 50% of approved yield and losses are paid at 55% of the average market price determined by FSA. Additional buy-up coverage is available under the NAP program for up to 65% of approved yield and 100% of the FSA average price. Coverage is available up to a maximum loss payment of $300,000 per farmer per year. This limit is significantly increased from the 2019 crop year. If you are interested in purchasing federal crop insurance, or NAP, you will need to monitor important program dates for enrollment and reporting. One of the most important of these is the sales closing date, by which you must file your application for the insurance. These dates vary by crop, insurance program, and county. However, many spring planted crops have a March 15th sales closing date, and some fall crops share a November 15th sales closing. You should contact a crop insurance agent well in advance of the sales closing date if you are interested in obtaining coverage and to check the appropriate dates for your area. As we wrap up, let's quickly summarize some of the benefits of crop insurance. For one, you can reduce risk and increase your long-term profitability. You can reduce farm revenue fluctuations and volatility. Having crop insurance can promote survival of your farm operation when production and price losses occur. It's part of the modern farm safety net. Crop insurance can minimize the cost of replacing crop losses when production is for on-farm use. In other words, we don't always sell all of our production. Sometimes you might elect to use some of that yourself, and the crop insurance payment or indemnity you receive might go to replacing that crop. Finally, crop insurance indemnity payments can help offset revenue shortfalls and provide means for meeting payment obligations to your bank. In other words, it might keep you afloat in a tough year. Thank you for taking the time today to learn about crop insurance options and to improve your risk management IQ. Remember, there's always a chance for a bad outcome, but you can be a lot better off if you prepare for it in advance. If you want to learn more about your crop insurance options, I strongly encourage you to contact a local crop insurance agent. If you need help locating an agent near you, RMA provides an agent locator tool on their website. Thanks for participating. Here's my contact information. I hope you enjoy the rest of the conference.